To control inflation, the United States Federal Reserve, or the Fed, raised interest rates 0.25%, which is a large amount. Usually they do like 0.1 or 0.10 when they do raise rates. And it's only happened a few times in history, and I was kind of curious about well, what has happened to the stock market afterwards? Rising interest rates tend to hurt the stock market. Well, how bad is it, and how long would it take to recover, in terms of the stock market? And I found an interesting chart in an interesting article around that, and I want to share that with you today, and we're going to look at what we can expect going forward by looking at this chart. All that's coming up on Investing Education with me, Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting to you, in the description below we have free courses and big discounts on our paid comprehensive courses. Do check that out. Hey, don't forget to subscribe as well. All right, so let's take a look at interest rates are going up. They're going to 0.25. What does that mean for our stock portfolios and for stocks in general? So let's take a look at an interesting chart I found. And it's in this article from Morningstar. They do a lot of, financial news and evaluations and stuff. And the article was what a Fed rate liftoff means for stocks. So I want to know what happens. And then they give a little teaser here. Historically, stocks have done well in the months after an initial rate increase. So that's interesting. So in the article, and I have a link to the article in the description below, so do check that out. It's a nice article, kind of a longish article, and they got some other charts that are interesting as well, as far as, market performance and rate hike expectations and all sorts of stuff. But this is the chart that really drew my eye. Looking at this 0.25 specifically interest rate hike, and you can see there's only been 5 periods where this has happened before. And what's happened to the U.S. market, in particular, I believe what they're talking about is the broader S&P 500 market, over the next 3 months, next 6 months, and next 12 months. So if we start looking at the next 3 months, a lot of red. Red is bad, red is negative, and green is good on this chart. So you can see of these 5 periods here, 5 of the 6 over the next 3 months were red or negative. We have this big outlier up 12.5 back in 1997, but you can see, -5, -5, -1, and negative a little bit. The total average is 0.01, but I think that number is really skewed by this one outlier, 12.5. So I would expect really the next 3 months could be fairly not so great for stocks, at least looking at it from this interest rate hike to chart thing. Now, it could be up 12%. It could be anything, but this was an interesting thing from this chart. But what gets more interesting is looking at the next 6 months. We had one historically, one negative, and all the rest were positive. Again, I'm not sure what happened in 1997. I didn't want to take the time to go back in history, but again, up 20% over the, that's another outlier. But you can see some solid returns over the next 6 months, an average of 7.43. Remember, the stock market averages about 10% return over the long history of the stock market. So over the next 6 months, not too bad after this rate hike. And then over the next 12 months or a year, it's all in the green, right? Again, 1997, up 41%. I mean, this was the time after the 0.25% rate hike. If you could go back in time, in a time machine, go to, February 3rd, March 24th, 1997, and get in and buy a bunch of stocks because you're going to see some great returns. But even still, look at these solid returns after the rate hike, right? And it's up for an average of 15% compared to the long-term average of 10% return. And one thing that might be happening here with all this, by the way, especially with over the next 12 months seeing a better return than average, is that the stock market, prices in these rate hikes. They are anticipating that these rate hikes are coming. The Fed is giving signals that they're going to do a 0.25% rate hike. So stocks have been depressed already based on that, plus other global events and things that are happening, from inflation to COVID to Russia invading Ukraine. All that stuff has depressed stock prices. So if anything, this could be encouraging, saying, well, stocks, that price is already built in there, that decrease. So for stocks over at least the next 12 months, maybe look pretty good as far as looking at historical things. Again, we've only got 5 data points here. We got that one outlier in 1997, so I don't think this is what's for sure going to happen. But it is some encouraging news as far as it's not a chart that's all red. So I hope that encourages you, and start looking maybe for bargains in stocks and checking out maybe some undervalued stocks. That might be a good time to buy in now, with the idea hopefully they'll grow in price going forward, and particularly if they maybe pay a dividend and they pay a safe dividend. Okay, with that, interesting chart, link is below. Check out all the other stuff in the description below. It might be an interesting read, and take a look at that chart. And again, I wish you all the best on your investing journey, and good luck investing. And hopefully this will run true, or over the next 12 months, we'll see some nice, good returns. We'll wait and see on that, but do keep investing, and keep investing in stocks.